Folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond, and you might be asking, where have I been? This is the first Best Stock Charts I've done in 2019. The reason why I haven't been doing swing trading today, which I generally put out in the morning, and Best Stock Charts for the coming week is that I've been working on the website, pedal to the metal, trying to get it done. There have been a lot of technical issues that we're working through. We're almost there. It's like so close yet so far type of deal. But we're getting there, and it should launch this coming week. So I wanted to get back, now that I'm getting a little bit of time back, I want to get back to putting out some good content and discussing the overall markets. And today we're going to go over best stock charts for the coming week, which is where I talk about the past week, how it was for us, what I'm looking at in terms of what's good about the market, what's bad about the market, and then finally the stocks that we're watching for the coming week. If you're a member, tomorrow I'll be putting out the week ahead commentary. There's been no interruption of that, as well as the evening commentary market wrap. So that'll be coming out tomorrow, being Sunday. So let's get to it. Last week we took some shorts off the table. We were short of the Russell 2000 and of the S&P 500. It was a very small position, an opening position. And I said, you know what? We've closed above resistance. Now it's time to step back and live to play another day. We'll look to re-enter at higher levels. And thank goodness that we did. We did short Amazon. We made a nice profit last week. And I'll go over that trade in a moment. I booked profits on the trade for a particular reason. I'll talk about that in a moment. And let's get to it. So one of the charts that I'm watching is the Baltic Dry Sea Index. And I haven't gone over this chart in quite a while. And for those not familiar with what the Baltic Dry Sea Index is, it's the pricing power of dry bulk shippers. So if you want to put wheat on a container or a manufactured product on a container, ship it over to China, or China ships it over to the United States, it's the pricing power of that shipper to be able to send that good and create a profit. It's a measure of supply and demand in the marketplace. Their ability to raise rates is a sign of strain on capacity, right? And if you have too much capacity, you have to drop down your rates. So that's what this chart is. And what you're looking at here is a major breakdown. This is a monthly chart. So here was the month of January, off to a horrible start in January of 2019. And this month, we have a continuation breakdown. So it looks as though we are going lower on the Baltic Dry Sea Index. So what does that mean? What that means is that there are problems in the global system. Not just the United States, but globally there are problems. And if you want to see the relationship of the S&P 500 versus the Baltic Dry Sea Index, we'll do that right now because it matters. Okay, so in blue line chart, we have the S&P 500, and in candlestick, we have the Baltic Dry Sea Index. And you can see that for the most part, they trade in tandem. The Baltic Dry Sea Index has been in a trading range for 7 years now. Let's say we're in our 7th. And the S&P 500 has just gone through the roof, obviously. Why? Cheap money. So now this rally that began at the bottom in February of 2016 has now broken. Let's throw some lines up here and illustrate. Okay, so what we have here is a major breakdown on the Baltic Dry Sea Index. Here was our bottom, again, in February of 2016. Nice, strong rally. We broke out the month of September of 2017, rallied, pulled back. We retested the breakout point, a very healthy event, and we launched to take out the prior high. Now, the problem is that while we did break out and we closed above the prior high, we failed the following month, being August of 2018, to break out to new highs and to close there. And not only did we fail to continue higher, we rolled over. And now we have broken down below this lower band of support. And that's no bueno. That's bad stuff. So not only have we broken down below one support level, not only have we broken down below two support levels, but we have three support levels that we have sliced right through like a hot knife through butter. And we are going down here to 509 on the Baltic Dry Sea Index. Now, normally, the S&P 500 and the Baltic Dry Sea Index will trade in tandem. There may be a lag when one tops out. Case in point, you had the S&P 500 double top out, final peak in October of 2007, while the Baltic Dry Sea Index didn't top out until May of 2008. So there might be a lag, but ultimately they will revert to the mean. They will trade in tandem. So what we're seeing here is a major technical break on the Baltic Dry Sea Index. We're beginning to see some lethargic trade on the S&P 500. My guess is that the S&P 500 is going to weaken up even further because this technical damage to the Baltic Dry Sea Index is the global economy sending us a signal. All is not well. And ultimately, the S&P 500 is going to have to react. And one might argue that we reacted here back in September when we began to top out and then roll over. You could see that the S&P 500 reacted along with the Baltic Dry Sea Index. The S&P 500 has been able to rally back, no new highs yet, while the Baltic Dry Sea Index has continued lower. There's a problem here, folks. Don't forget the Baltic Dry Sea Index. Okay, let's segue over and into some charts. Amazon. All right, we shorted Amazon because we flashed a bearish engulfing on February the 6th. What is a bearish engulfing? It's when you engulf. A perfect bearish engulfing is when you engulf the entire intraday move of the prior period. In this case, we're using a daily chart. So we, on the 6th, fully engulfed the highs and the lows of the 5th. That is a very, very bearish event and highly probable that you will see a continuation move lower. And sure enough, we did. We broke support. I booked profits here on the 8th out of fear that, and I put this in the alert, out of fear that we would see a short covering rally into the close. And sure enough, that's exactly what happened. I didn't get out at the lows of the day on Friday, but we certainly got in well off the highs. Okay, we had a very, very profitable trade here. So nice trade. Congrats to those members who joined in. I'm going to be looking to short Amazon again. I think that we're probably going to pop here early next week, but I think we're going to roll over and head lower. And that has nothing to do with Bezos and the pictures. That's just the catalyst. That's just an excuse for Amazon to sell off. I mean, Amazon peaked out back here in October. So this Bezos thing in the pictures has nothing to do with it. Gold. So I have been pounding the table on gold and the gold stocks and silver for over a year. Buy gold. Buy the gold miners. Buy the dip. We're going to see a rally. We've gotten that rally. A big one. Not only have we had a rally in gold, we broke out. We broke out in January. We're down so far this month. We're retesting the breakout point. This is a major, major breakout on gold. Nobody's talking about it. Still, nobody wants to talk about it. Every once in a while, they bring on Carter Worth. CNBC will bring on Carter Worth, who's very, very good. I really like Carter Worth. And the last time he spoke about gold on the charts, he was very bullish with no caveats. Normally, you have technicians that get up to the podium, whether it be on CNBC, Bloomberg, whatever, They may talk up gold, but there's always a caveat of one reason or another why they don't like gold. Whereas Carter Worth, he spoke last week on CNBC. He was very, very bullish, and for all the right reasons. I agree with him 100%. So I need to give CNBC credit where credit's due, which is very, very rare. So I digress. So gold is breaking out on a monthly basis, and it can't be ignored. So while I'm not long of gold, I am long of the gold miners, and they are doing very, very well. I plan on buying gold. I plan on buying more gold miners. The only thing that's holding me back right now is the strength in the US dollar. You must have a weaker US dollar. There is a caveat. I'll get to that in a moment. You must have a weaker US dollar in general for gold and the miners to rally, because traditionally they trade inversely of one another. What's the caveat? When do they trade in tandem? When there's fear. If there is a Brexit-like event, which is the last memorable time that I know of where you had a multi-month rally in both the US dollar and in gold. And it was a big rally at that on both. So absent some sort of an event like Brexit, it could be the trade war. I don't know. That will cause gold to maintain a momentum despite the strength in the US dollar. So members, more to come on our gold trade. Let's move forward and talk about positions that we're watching for the coming week. I'm going to do a high-level view right now. Members, tomorrow on the weekend commentary, I'll do a deep dive into the technicals of the charts. When do we want to buy? At what levels? What's our price target? What's our stop points? And what else do I like about the charts? But for these purposes, for best stock charts, we're going to go over the higher level view. So let's get to it. First stock up, PayPal. PayPal looking really good here. Daily chart. No other chart you need to look at. And that's rare for me to say, because we know that we have historical resistance immediately above. We were in a wedge formation. That all ended on Friday. We broke out above the upper band of resistance, and we closed there. Most importantly, volume was light. Warning flag on the track. So ultimate oscillator, higher lows. No breakouts yet on Stokes. However, RSI has confirmed the breakout on price. So PayPal looking good for the coming week. Next chart up. I spoke about this one with members last week on the weekend commentary. And we were looking at EGOV as a short trade because it had RSI above 90. Now, this is historical resistance. We did manage to close above it one day last week, but then we flashed a breakout point failure or a bull trap, and we pulled back. We didn't get a big sell-off. Usually you would. Normally what will happen is when you get a bull trap, you'll trade all the way back down to the prior low of the trading range, and there's a very high probability that that support level will not hold, and that still may be the case. So I'm looking to short EGOV. Why? It's because it's still very, very overbought on RSI, 86.03. We're also at resistance. Now, I will be watching for a rally up and through two resistance levels. Here's one, and the obvious second one is the horizontal resistance level in currently red, which may soon turn green. So we're going to be looking to short EGOV. Members will talk more about it tomorrow on the weekend commentary. Next chart up, Adobe. We'll go over the weekly chart. Members will go over the daily chart tomorrow to time the trade. We broke out last week above this upper band of resistance. I really like a trade above the 260.72 level. We closed at 257. We're not that far away in percentage terms. A good week last week, up nearly 4%. Volume is a concern, whereas we did not meet the 3-month moving average in red, and we had volume on a week that we broke out that came in lower than the prior week's below average volume. So that's a bit of a concern. It doesn't mean you can't trade the shares. It just means you may want to not have that big of a position until you see institutions step in and begin to drive the shares up higher, and you'll know when they're there when you see big up volume bars. The next chart up, weekly chart of Arrowhead Pharmaceuticals, ARWR, the symbol. Weekly chart, we broke out last week on a bullish key reversal, meaning we traded down on the week. We took out the prior week's lows, but we reversed the close up on the week, and we closed at the highs of the week. Very, very good week. RSI, higher lows, higher highs. Volume was very, very good. Right? Volume was above average. So members, will talk more tomorrow about a strategy for ARWR, Arrowhead Pharmaceuticals, tomorrow on the Week Ahead Commentary. Moving on. FISV, FISV, we're going to go over the weekly chart, higher level view. Then tomorrow, members, we're going to go over the daily chart, perhaps even an intraday chart. We are looking to buy FISV. We had a bullish engulfing on a weekly basis, very, very bullish stuff. And we are at all-time highs. What does that mean? How does that benefit us as longs? It benefits us in that we don't have to worry about legacy buyers, those who bought at higher prices, now looking to get made whole. They don't care about making a profit. They just want to sell and get their money back, right? We don't have to worry about that. That's the beauty of owning a stock at all-time highs. And that's where we're at on FISV. So we closed at the highs of the week. We engulfed the prior week. Clearly a stock that we want to watch as a trade moving into the coming week. The only caveat I will give everybody, this market should be viewed through the lens of scrutiny. I showed you what the Baltic Dry Sea Index, a signal that it is sending us about the global economy. Getting back to FISV, volume has been simply outstanding. Really, really nice volume. This is when you know institutions are hanging out. They're bidding up the shares. So we want to follow in their footsteps, right? We don't want to fight them. We want to follow along. So members, more tomorrow. The final chart I'll leave off with here is GTLS Chart Industries. Love the name. Being a chartist, love it. We have a weekly chart here. Members, will talk about the daily chart tomorrow. To time the trade, we'll talk about strategy on the daily chart. We're using the weekly chart to see where we're at on a historical basis. Do we have overhead supply, meaning resistance? Yes, we do. We have it above. This is why we use the weekly chart. You won't see all of this on a daily chart. You need to take a step back, take a higher level view of the marketplace, and you'll see that you're going to have some resistance above. But we did break out last week on a weekly basis. Volume was very, very light. Very light. But the chart still looks good. We'll entertain a trade. But that volume is a concern. And that is it for this week, folks. I'm going to put a coupon code in the description area if you watch us on YouTube for an annual subscription. The reason why I'm offering a coupon code is that the site is not done. And I don't want to take your money for a full year subscription when the site is not done. I'd rather give you a discount, and that'll pay for you to wait to have the new website come up, and that way you feel like you're being treated fairly. I don't want to take anybody's money until the new website is done unless I'm providing you a discount. I'm all about value. That's how I operate. So use the coupon code below. If you're watching this on the blog, I'll put it in the blog area. So it's only for annual memberships. I can't do it for monthly memberships, only for annual memberships, silver and gold membership levels. And that's it for this week, folks. Members, I'll talk to you tomorrow on the Week Ahead Commentary. For non-members, have a great remainder of your weekend. Have a profitable trading week, and I'll talk to you soon. Be well.